Good morning. So what do we got? It's Friday. Thank God. Seems like a long week. So real quick, what is today? Today is non-farm payrolls day, and I'm sure you guys are tired of hearing me say non-farm payrolls, but that's what we're watching. It comes out at 8:30. Um, at 9 o'clock, I'll talk about the trade. There's an actual setup. It's actually better with the futures, but we could watch it, and it gives us an indication on the market. And we could probably play it on the market if it lays out in the S&P. But normally, I watch the euro bonds and the S&P, and it's a gimme. It's something that every trader out there makes money on. So there are a few trades out there that are just gimmies every month, and you make some loot doing it. So that's it. So we'll look at hourly rate, wage, and everything. That's going to be important too. Because the tighter the labor market, the more it spurs inflation. Um, Baker, I bet we're going to start hearing more about the rig counts. And if you're an oil trader, you understand what the rig counts are. But they're going to start looking at the rig counts and see how many rigs are operating because oil is a topic of interest right now with what's going on with Russia and the Ukraine. Those dirty bastards. So Tuesday, let's say next week we got balanced trade. I don't know if that's really going to be a major market mover. Um, Although it might give us some insight into the supply chain jolts. And let me tell you something, man. Get ahead of the curve on the supply chain inflation. I'm seeing it. I'm seeing it in the streets. I'm seeing items come down. Food's expensive, but that's just sheer greed. I mean, everybody understands that even the farmers are starving. They're still getting paid pittance, and it's the middleman and the big conglomerates that are making the money, charging us a fortune, paying the farmer pittance, and making a killing. It's a shame. It's a shame. Um, Core inflation rate year over year. The previous was 6. That's pretty good. Came off to 7. And inflation rate 7.5, forecasting 7.9. It'll be nice if we come in light because if we come in light, then we're going to get that indication of the peak, and there's got to be a peak, and I'm expecting it within a month or two. This report and next report. I think we will be peaking. Oh, before I go on, just to satisfy my free folk friends on my team over here, subscribe, hit the bell, and hit the like. Your subscription and the bell will let you know when we're up and running, and we're streaming live, baby. We're making money together. And hit the like because that tips your host. That adds to the algorithms. And since very few of my listeners will break with the dollar bills, your support on the likes and the chats just as welcome, and really appreciate it. So and I like the zingers, so don't mind me and my arrogance. I am a financial professional. I'm the real deal from Wall Street, so I have that nasty attitude where you got to have thick skin, and we like to rib each other, and you got to be quick with the comments. So this is what you got to deal with. In other words, a dick, or as my sister puts it, I lack a human component. Um, Michigan. So that's about it. Next week is pretty light, pretty light. There should be some Fed talk, on the minutes. That might come the following week. Let's just see if we could find that. Keep our eye on it. There you go. Oh, okay. The interest rate will come out on the 15th or 16th. That's what everybody's waiting for. So that's like 2 weeks away. Yeah, we shouldn't have minutes. Feds were just testifying before Congress. I'm a little confused, but all right, moving on. Let's see what is of interest in the news. Let me guess. Can it be Ukraine? Yeah. Stock futures down as the investors weigh Ukraine developments, await key jobs report. This is so I mean it's just so open ended. Their headlines because they don't know really what's keeping the market down and what have they throw something out. Yeah, we're all looking at weighing Ukraine. What the hell does that mean? We're looking at it. We're making our decisions. Yeah. I mean, and await key jobs reports. So they throw two possible instances in here. That's why you kind of try to back away from this stuff. If it was well, it is an aggressively down day. There would be a shitload of sensationalism going on. And Russian sanctions spark fire sale and asset freeze for UK based oligarchs. Europe needs a wake up call. Yeah, they got a hold of the nuclear plant in UK. I mean, it's a mighty fierce force they're fighting. But I'll tell you, if it's true, if it's not propaganda and it's genuine what the Russian soldiers are saying, if it's not coerced, I don't think there's a lot of support behind this just in the military alone. But you know what? As far as the U.S. goes, we're eating up resource for Russia, and I think that's the game plan, man. They'll keep supporting the Ukraine because the Ukraine is destroying the Russian army. They limited their capital, their war chest, so creating new equipment, advancing. I mean, really, this is the rock on which Russia will break itself. I'm very convinced. It may take a little while, but I'm very convinced. And they're just going to be, servants to China now. They have a new boss, and it is Chinese. So, all right, good riddance, Russia. Okay, so here we are, the S&P for the day, and we put in this trend line, which was an aggressive trend line. Man, this is getting so hard to see. There's so much shit on here. So this was an aggressive trend line, and out of the ordinary. Yeah. Just because you had this movement, but we could kind of call that an outlier with extenuating circumstances or extreme circumstances. You sometimes get that outlier, but nonetheless, you could see it respected here. Obviously, began there. This is what I use to create the line, but there's a respect here. It respected here. You could see a little outliner here, but it respect the line here, and it respect. Is it respected? Respect it here, and rejected. And now we are down, down, about 40 points. So we're pretty much at the close. No, we're at the low. We're pop up. No, we're at the open of yesterday. Yeah, man. We're even at the low of yesterday right now. Yeah. Okay. So the low of yesterday was the open. So we're gonna break yesterday's low, which is pretty exciting. I'd rather. I mean, we're right there. So if we could open up a little higher, I'm gonna be looking for that trade, and that could be a move down. We may bounce off the 274. I am looking for the 41.98. I know that's a long move. I don't think that's gonna happen. That's fairly aggressive. Um, we don't really have any gaps that are good targets. So we're going to have to see what we do here. It's going to be interesting. I'm going to look for a break of yesterday's low. We've already broken today's low. We're going to gap down. I don't know, man. I don't know. Got to keep your eyes open. I mean, could be the beginning of a move down. I would like to see a nice move down. I'm actually positioned on a swing for a nice move down. And if I get that, it's going to make this a real killer month, which is cool because on my swing trades, like since November, it's been difficult. Um, my directionals have been doing very well, and my income trades are kind of hurting. But this will make it a really nice month if we can get that move down. So that's what we're looking at. I guess you guys don't really care how well I'm doing. So if we look at the 10-year, what's the 10-year telling us? We'll just take a look at the 10-year on a daily. I mean, this is a very negative bar. The momentum is negative, but I'm kind of feeling like we should be neutral on this, like we're going to go into a consolidation round here. And that's how I'm looking at it. If we go into a consolidation, then it's going to be emotion that's moving the market. And growth stocks are going to value probably taper down near volatility if we get that that consolidation. We'll keep an eye on it. I mean, a very negative bar. If we break the low, it could move down further. It doesn't feel like it's heavy. I can't quantify it though, but the feel. Although, look at this. This you could argue as a cheesy head and shoulders. Um, so you could look for a break of that low on bonds right there. There may be another influx of buying into bonds because of that takeover of the Ukraine nuclear plant. It might show progress for Russia, which would add fears. Fix is bouncing. BTC, any setups in there on the daily? Look, close that gap nicely. This looks like a nice flag. So I'd be looking for a bull flag right here. What I don't like on this is this representation of a double top, and it looks as though the momentum's a little bit lower, so could give me an indication that it's moving down. But here we have a nice strong bar, little gap, good retrace. So watch for the break of this. It's having a hard time busting out of this pennant. Which is not bad either. I mean, if it consolidates a little bit, build some strength, some foundation, and then get ready for a move up. But I think I'd be neutral to bullish pending the trigger of this flag. That's not too much of a retrace. That gap kind of pulled it down. I think I would like that as a flag. And my bias might be bullish on this right now. And this would be aggressive. If you wanted to wait, you could wait for a break of this pennant right here. Or to tell you the truth, I don't even like what that looks like. Let's go like that. There you go. That's a better pennant. So you can make a break in the pennant. I mean, if you really want to be conservative, you could just put a horizontal bar right across the high and wait for a break of that. But if you wanted to get in, capture a little gravy, you make this pennant, take that break, or very aggressive, take the break of that bull flag. And that's what I'm looking at. Let's take a look on the 60s. This is actually, I'm really starting to appreciate the trading pattern in Bitcoin. But again, I'm going to reiterate, I don't see it as an investment. Yeah, nothing really floats my boat in the 60-minute. I'd wait for that daily to trigger. Nothing really. I mean, it could be making a cup and handle. We have a nice sweep over here. Look for a little more aggressive. And it looks the same on the 60. I'm looking at the 30 right now. It could be a cup and handle. It would have to become a little more obvious to me in order for me to consider it a good setup. Actually, maybe a move up to this level would be better, and then a retrace. So I would watch that to develop as a cup and handle. But right now, I'm probably looking at the flag and AMC. Ah, that's all I got to say. I'm just neutral on it. I mean, it's just eating up this pennant. And the further it gets along the pennant, the less energy it has on the breakout. So, yeah, really nothing. No need to trade it. I mean, the move is going to be inconsequential. If you're an AMC guy, then you like to fly by the seat of your pants, you might as well be trading Bitcoin. You get that action out of it. Lots of things out there to trade. Investment, tons of better shit than AMC. I mean, go for dividend stocks for investment. I mean, they're paying you to sit on the stock. Yeah, I mean, it's a no-brainer. Let's look at ES, the futures. Where are you? I'm just looking at the 240s. Yeah, I think we have a pennant in here. Let's get this bigger. Well, okay, we have a resistance and then an upward trend, and it looks like we're getting ready to break that. This looks kind of flaggish. Momentum's negative. The indication is more towards the downside. So on the based on the futures, where where it's at right now, we are neutral to bearish. So and S&P, we're just feeling kind of bearish. So keep an eye on that, everybody. All right, that's it. So everybody, watch your downside, man. It's all about risk management. Don't get hurt. Save your capital. Be there for the better markets when you can make a lot of money. Make sure you have a good, strong war chest. When you're trading, you be calm and cool. Get that meditation in so that you're at peace. I will be live at about 9 o'clock talking about that non-farm payroll report trade. Other than that, hey, good luck trading.